The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 10th terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And that's a good thing. Now, what I want you to know, folks, I'm absolutely grateful for your presence here, but even more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Internationally, our number is 727-445-1044. Would love to hear from you on this terrific Tuesday. Of course, you can email me, steve@tfn.com. Inside the Tiger's Den, you can ping me at any point in time, and I'll assist you. You know, 4 eyes are better than 2. We'll go rip apart whatever it is that you want to take a look at. We'll look at both sides of the trade, as we always should. On this terrific Tuesday, of course, this is the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off about 35 points. She's trading at 17,694. The S&P is off 4 points at 2,074. NASDAQ Composite down 32 points at 5,062. Russell 2000 off about 3 points. The DAX closed up 17. The FTSE down 19. Really a flattish style market out here. Not a lot of volume inside the market today. Gold is up 70 cents, trading at 10.88. Silver's off 4 pennies. Light sweet crude up 30 cents out there. Lead the charge, the upside, Chipotle Mexican Grill. That's up a little over 1.4%, up $8.40. Priceline is up $4. Remember, we've got that island top reversal in Priceline. Does not look good when we take a look at its stock chart, technically speaking. Rackspace Holdings up about $4. O'Reilly Automotive up 3. To the downside, Barrett Business Services, BBS, down $15. That's 30%. Puma Biotech off about 12%, down $11. Ultragenics Pharmaceuticals up 8.5%, about the same in dollar wise. Tesla's off $7. So let's get into it. Let's go take a look at both sides of the trade here. So now, well, first let's talk about the market. The market actually today is behaving the way that it ordinarily does after a day like yesterday, especially when we have a one-day rate of change equal or greater than 10% in the volatility index. So a movement of sideways action, which is basically what we have out here. Maybe even a bounce, even if the market finishes in the positive territory today, that would be normal. Just kind of a sideways-ish type move out here is what that typically indicates is that we're going to see lower prices tomorrow. Tomorrow is Wednesday, Thursday out here. But there is something that you and I have to pay attention to. The bulls and the bears need to pay attention to this. And if we take a look at, so look at a couple different things out here. I'm going to put the NQ up on my screen. Then we're going to go ahead and rip that apart because, the NQ was the one so far when we take a look at the NASDAQ Composite specifically. So let me just backtrack here for a moment, por favor. And if we take a look at our summation index, if we take a look at our price oscillators, again, New York Stock Exchange, left-hand panel on my screen out here, move below zero with conviction. Yesterday, it had closed below there on Friday. Little nuance. It was so subtle, but wasn't subtle to me. If we take a look at the NASDAQ Composite today, finally down below zero. Now, I don't know if it's going to end up this way here at the end of the day. What did it need? If I look over at my spreadsheet, What it needed was 228 net declining issues inside the NASDAQ composite. Clearly, we're there. It's below zero. It's got that declining tops in there. So if we finish right around here and it finishes below zero, what it offers you and I is the promise for lower price. Now, where's that lower price inside the NASDAQ? We're going to look at 49.9954 as a potential first area of support. Second level of support would be the actual gap up day from October 22nd. That high was 49.27. Basically. So those would be the areas of support. Now let's backtrack here. So the NASDAQ held up yesterday. It's only today that it's been able to slice through its price oscillator line out there. Now let's take a look at the futures contract, because this is giving us the better signals as to what's really going on inside the market. Now, if we take a look at, let me just kind of relabel everything out here. So if we take a look at the most recent high inside of the NASDAQ, that's going to be the trading session from November the 8th, right around 9:30 in the 21 would be 12 and 9. Yeah, right? 12 and 9 would be 21. Thank you. And so around 9:30 in the evening was when we saw the high out here on November the 8th. Now, what we can see here, certainly we see yesterday's move down, very rapid move down, took a period of a couple hours out here for the move. And what we saw this morning is right around the time frame here of about 10:30, really took place at 10. So between 10 and 10:30, price was moving lower, and it was doing it with less relative weakness out here. Now let's go take a look at a couple of different wave count options that may be in play out here. So let's see if we can get that. So this is really that. So this is cool. Thank you for asking me to do that. You didn't even know that you asked me to do that, did you? So if we take a look at this, this is very interesting. And you're going to say, what's interesting? Let me just do this here. I was going to move a couple things down that aren't as relevant right now for this discussion. Okay, so if we take a look at that high, again, they came in at about 9:30 in the evening, all the way down to yesterday's low at noon. So right about noontime out here, we saw that big thrust to the downside. Then we saw the bounce that unfolded. Now, this may be just simply the bounce that would be anticipated because of that one-day rate of change inside the VIX index out here. And what that means is that we saw a move higher into about 11:30 last night out here, and then price started moving back down. Now, from that high of last evening, okay, at 11:30, and the high out there was 46.6225. If we do a alternative wave count to the downside out here, you're going to see that as we came into this low here at 10:30 this morning, we got to that famous seventh inning stretch to the downside, and price was moving lower with less relative weakness. Now, price can break through this level. We haven't really seen a well, we did see a bullish reversal signal. Just wasn't confirmed. So at 11 o'clock, we got that little piercing candle, a little bit of move sideways out here. You like to see it close above the actual high of that session. So the level to be watching is 46.3550. If you get up there, really, I'd say the level is going to be 46.3650 because that's going to be the top of the TAS market profile. So if we see a close above that, then this pattern here says that further bounce is warranted because price has been pushing lower with less relative weakness out there. And we've got a seventh wave move. You say, where could price go to? You know what I'd do is we'll look at the 120-minute chart, see if we can find some additional levels of support. I would say at least back to the highs of last night, so around 46.62 would likely be the outcome. Whereas if we do see these lows get taken out, that'll also give you and I an important message out here. Of course, that message would be, hey, is it going to move lower? Because from this high out here, back on November the 8th, that count is just one tick away from getting down to a seventh wave move as well. So if it does that with less relative weakness, this is where I think it's really going to be the NQ, where you and I are going to find out what's really going on inside the markets. Now, we may not see that today, this afternoon. It might take place overnight, might be 3 or 4 o'clock in the morning. But we're about to see, because the NQ has been so strong. Now, when you get to these seventh inning stretch counts, the downside, when price moves lower with less relative weakness, when those levels get taken out, right, there's nothing more bearish than a failed bullish pattern out here. So this is where you and I will learn something about the market over the course of the next day or so. Why do I say that? Again, nothing more bearish than failed bullish patterns out here. And if we take a look at the 120-minute time frame, which we're going to do next year, so on the 120-minute time frame, we can also see that price has been moving lower with less relative weakness out here. And now we do not have any kind of reversal signal. Now, on the 120-minute chart, 46.66 really becomes the level of where a bounce could actually take us to. That's the top of the box on the 120-minute time frame. Now, this box that you and I are looking at, that should really change the colors there, so just make it easier for you to see. But the light green and the lime green color and the little aqua blue, light blue color out here, you can see how the point of control is closer again to support. That says that this really is a bullish style box out here, and it really should be. So you got a bullish style box, you got price moving lower with less relative weakness out here, and that says the market ought to be able to bounce. And if it can't, that really provides you and I with a message of more to come to the downside, which is what I really believe is going to occur. But it would be foolish of me, and I would never do this, for us to ignore the patterns that we're looking at out here. Do I expect a bounce to get above 46.66? No. If it does, maybe that's got some additional meaning out here. So you've got the 2-hour chart, you've got the 30-minute chart that show that price relative strength divergence out here. We don't have it inside the ES Mini, so it doesn't make a sense to really go spend any time taking a look at that. We don't have that on any time frame. We do in the case of the Dow futures. So in the Dow, let's take a look at what's really important here. Give me a moment. Let's do this. Let's do this. Let's come over here. I think I should have this tab somewhere. Okay, so we're going to take a look at the Dow futures. Let's go ahead and blow this up on my screen out here. And if you're watching us on Tiger TV, I hope that you are. You're going to see some horizontal lines going across our screen out here. The blue ones are referring to the daily TAS market profiles, and that's one that we really want to focus in on right now. So what we can see is we can see that the top of the box is held as support. And that price point, by the way, is 17,623. That's a number that you want to be paying attention to. That's the Dow futures contract. And the reason that we pay attention is because it's trading basically all the time. So we can go ahead and see our prices moving higher with or without strength, or lower with or without weakness out here. So it just provides you and I with so much more information pattern-wise. We can see that price is below that 9-period exponential moving average. But the real key number to be paying attention to is 17,623. The Dow finishes badly today. I don't know if it will or it won't. It may just finish right here. When you wake up in the morning, no matter what the market does for the rest of the day, if we see a close, if you see price below 17,623, it says you've got another at least 200-plus points to the downside, because price then will, of course, how can I guarantee that? I can't. But what price should do is get down to about the 17,405 level. And that's what it really looks like it wants to do. When we put that together with what's going on inside of the price oscillators inside the market. And so, hey, we got to go take a commercial out here. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off about 40 points, S&P down 4.5. If we go take a look at the ETF structures out here for the indices, we begin by taking a look at the Qs. They've done about 21 million shares as of 124. That puts it on par to do somewhere around 37 million shares. Now, if we take a look at the Qs, what they have finally done here, as of at least today, is they're back now below the low of the July 20th swing point. So July 20th used to be its all-time high. That swing point, by the way, had volume of about 26 million shares out there. As I say, you're going to be down with about 37 million shares. But it's really coming in essence, to the area where it had broken out. This was on October the 23rd. That's where it's trading into right now. And that breakout was with 53 million shares. So you're pulling back in that level with kind of light volume. I would say what's more important to pay attention to is really the market profile. So the bottom of that box is 112.65. That's the number you want to watch. If we see it close below 112.65 today, volume or not, it says you're going to go move down and at least test 112.07. But I would say more likely what you're going to do is you're going to at least come down and at least test the top of the October 22nd level, 109.80. And that's what's going on inside of the Qs. Now, yesterday's volume was 33 million shares. So, we've got similar type volume today. at least as of about 1:30. If we take a look at the IWM volume here today, 11 million shares. That says it's going to do somewhere around 19 or so. What the IWM has done, it's really back below the September 17th level. You know, this thing has just been a real weak link out here. Key numbers to be watching inside IWM today is going to be 116.79. Today, tomorrow, if you see it close below that level, you know what? Inside the IWM, that probably brings into play the gap out here from October 5th, somewhere around the 111.54 area. Inside the SPY, the SPYs, 38 million shares so far to the downside. That equates to about 68 million shares. Yesterday was 131, so you can see we've backed off quite a bit from a volume standpoint. It has not tested the gap up, which was October 23rd. That gap up, that little sign of strength was 144 million shares. But the key number to be watching in the SPY today will be, can it hold the bottom of its daily box, 207.55. Closing below that says that 205.51 level is likely the next target area for the SPY. Let's finish this off by taking a look at the Dow Diamonds. Lucy in the sky with diamonds. Volume thus far has been 2.4 million shares. 2.4 million shares says you do about 4 million for the day out here. Now, yesterday, volume to the downside was about 7.9. So you can see the volume patterns have dropped off altogether. But you and I, we don't just focus on volume. We've got many other things to be paying attention to assist us with our trading and investing out here. So the key level to be watching inside the Dow Diamonds is going to be 176.11. A close below that, we go test the gap from October 22nd, and that is 174.91. That takes care of our ETF structure. Let's take a look at the technology sector. We've got a bit of a mixed bag out here. Technology sector, the XLK down with 42 cents out here and 9 million shares. That says about 18 million, 17 to 18 million. Now, this is, let me turn on our profiles here, see if I can do that. Well, they ought to be turned on. Anyways, we were just taking a look at them. So that's got a long way to go. So it's now back below the weekly profile. So it looks like, you know, if you were to see a close inside the XLK, what I'm really targeting out here, you know, it's already below the swing point low from that gap up of October 23rd. That low is 43.56 here, 43.49. Last time down was on October 27, 7 million shares. Okay, so maybe it's backing off with a bit of volume. Yeah, it is, because yesterday was 10 million shares, today 9.9. So you do have the XLK, which is the number one weighting structure inside of the S&P 500. And that really is suggesting that price ought to get back to the 42.73, 42.35-ish type area. I would say if it closes today, I mean, this is just being ultra conservative. It closed below 43.36 almost guarantees that, and that's inside the technology sector. Moving to the upside today, you know, you've got utilities, not a big deal out there. ExxonMobil, you and I haven't looked at ExxonMobil in forever, so let's go do that. ExxonMobil out here right now trading at 82.08. Try to figure out what this is doing out here. Completed an A to B equals CD pattern. And looks like this is going to probably pull back into about the 78.40 level. Right now you're trading 82.08. Steve Rhodes with TFNN. Dow's off 22, S&P down 3. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 28 points. S&P down 3. Composite up 29. I had a request to take a look at the IYR. Let's take a look at the IYR and then another ticker symbol, WPC, out here. But let's take a look at the IYR first. We're just going to apparently a slow day in the markets, even a slow day on my screen out here. That's interesting. That's weird. Not sure why it's resolving the symbol out here. So I'm just going to have to fill this in with just something else. That's wild. I don't know why it is doing that. Let me see if that is the case with other symbols that I punch up out here. No, it's not. Interesting. So the IYR, which IYR is what the is it the real estate IYR? Here we go, the real estate, yeah. So it's up on my screen right now. So as we take a look at the IYR, let's see what we notice out here. Pulled back yesterday with about 13 million shares. Let's take a look at market profile. So this thing has found support yesterday down at the weekly market profile low, 72.48. So I don't know if you're long, if you're short, what you're looking at inside this, but this thing had some accelerated volume. November 6th, this had volume of about 23 million shares. That's pretty significant. Now, it found support. This had a breakout area. Let's turn our profiles off. What you can see here is that the last time that this had volume to the upside was right here, trading day of September 17th. Now, September 17th, as you may recall, that was a fairly significant swing point day in the market. Market made a high, went ahead and pulled back. Well, so did the IYR. Now, the volume on that was 23 million shares, and you were coming into with 23 million shares back on November 6th. So found support right there. Yesterday and today, it is now trading below that swing point. Almost looks like the Russell 2000. It looks better than the Russell 2000, other than the mere fact that it's trading back below the 17. So what this individual is looking for is to be able to get long the IYR. What do we need to see in order to do that? You'd like to see some kind of pattern, that's for sure. You know, if you're going to look at getting long, it's trading below the September 17th level. I'd watch for the September 17th low, $71.20 out there. If we take a look at retracements from low to high, what you've got down at about that area of 71.63 is your 0.618 retracement level. So that looks pretty good. If we look at this on a weekly basis, let's go see how we ended the week and what it was doing. So on the weekly basis, it was moving lower with volume of 67 million shares, which is more than that. September 17th was moving higher with 58 million shares. So it's pulling back on a weekly basis with volume as well. So I would say, and if also on a weekly basis, you've got this swing point from the week that began August 31st that had 51 million shares. So the top of that level, if you see a close inside 71.94, that says you probably have to wait. Wait for what? That says you probably have to wait for a test of 70.88. And I'm looking at September 28th out there. So that's what the IYR is communicating to me right now as we speak out here. If you're looking to get long this real estate trust. WPC is the other ticker symbol. So let's go take a look at it. Give me a moment out here. I don't know why the system is slowing down, but never a good thing when you're doing live programming. But WPC, that is, I don't know why I don't recognize it, WP Carry Inc. Now this looks a lot like the IYR. So what WPC is inside the IYR is the assumption out here. Yeah. As far as primary trading ranges, I don't know that this is going to go back far enough. We'll take a look at it. But if we take a look at this equity out here, WPC is really suggesting today, right now, it's trading below its weekly profile high, which is brand new. And what this says to me is that this ought to pull back probably to the 57.44-ish area out here. Really the same setup. September 18th was when this thing had volume, so it's at least going to get down into that level, or should, which is 59.36. You're trading at 60.90 as we speak right now. With regard to horizontal trading ranges out here, is there any for the IYR? Let's go take a look at it. Put it on the monthly out here, see what pops up on the screen. Nah, it really hasn't traded enough just since 2000. At least long term, it certainly hasn't. Let me do this here. Let's see if I can put the dailies up. See what we've got. We'll turn the weeklies off, turn the monthlies off, and let me see on a daily basis what this thing has. Oops, and on the daily basis, let me see if I've got my midpoints on here. Give me a moment to look at that. No. No, I do. Yeah, there's just not enough good information. I would have to say that $64.40 is clearly an area where there is plenty of support. A lot of candles on a daily basis have closed at that area. So 64.40 would be the number there. So that takes care of WPC and the IYR, and that's for Peak D inside the Tiger's Den. Let's take a look at, I really want to try to take a look at some things that maybe you guys haven't looked at earlier today, but we have to at least look at the currencies. If we take a look at the euro, Japanese yen out here, this thing is trying to at minimum complete a 1-to-1 A to B equal C to the downside. 131.29 is that level. It may want to go quite a bit lower out here. As this goes lower, there's no positive or bullish divergence inside of this currency pair, which is the carry trade inside the market. So this is not giving us any kind of significant bullish signals. If we take a look at the euro versus the U.S. dollar, we know that this thing here is looking really bad. This thing wants to get to 104.59 to 105.20. That's really where it's got its next level of support. No indication whether or not that area will hold or not. If we take a look at the Japanese yen, this thing was on fire. It's just taking a couple of resting days out here, so no bearish reversal signals. This wants higher price. Higher price would be about 125.20. That'll put strength inside the U.S. dollar index. Right now, you got the U.S. dollar index trading out at 99.30. The U.S. dollar index wants to head up into the 101.90 area. It's really now above all levels of any kind of resistance. You could make a case, I suppose, that there's a really junior swing point from April 21st, which is trading into, but I don't think that's it. I think 101.90 to 102.45 is more likely where the U.S. dollar index wants to go to. That ought to keep gold, well, either just moving sideways, slightly higher, and then eventually another swoosh to the downside, and not a Nike swoosh. If we take a look at FCX as an example, we were talking about currency pairs earlier. We can see that that's trading lower volume-wise, 19 million shares. We know that Carl Icahn is in this trade, but what Carl's also in essence, is really the Australian dollar trade, because that equity, FCX, tracks the Australian dollar. When you trade one, you're trading them both out here. And if we take a look at the Australian dollar, it doesn't look good. It does not look good at all. This is the daily chart. Now, on the daily chart for this currency pair, it had a little bit of a rising price channel that was in place, and then that party was spoiled on November 6th. Sliced right through the bottom of that rising price channel out there. The green line that's on my chart, if we switch this over and take a look at a monthly chart for the Australian dollar, we're going to see that it is below a long-term trend line that takes you back to the year 2001, April of 2001. So prices below that. That says that price is likely headed all the way back to the October 2008 level, right around the 60-cent area out there. Not a good time to be bringing Australian dollars over to the U.S. Not a bad time to go over to Australia, though, because you can do things on the cheap. That's pretty good, because most things you go take a look at one of their menus, it's kind of like being over in England. It's basically twice what you would anticipate spending or paying here in the United States. Now, not so bad to be going over there to buy some Australian goods. So with this currency pair headed lower, so too should FCX out here. Now, where's FCX going to head to? 871, would be a guess. Broke out here, but the reality is what FCX needs to see in order for this thing to really giddy up and go would be to see that Australian dollar reject these lows, find some kind of sign of strength, get back above that trend line out there, and then it could finally start moving higher out here. So FCX looks like burnt toast at the moment. If we take a look at Chipotle Mexican Grill, let's go take a look at some equities out here that are moving. Chipotle's up by $12. Of course, this stock has been taken apart. This thing did come back to, it looks like, a level of support that you and I had identified. Let's go figure out where that, that was a breakout area. Okay, so as we take a look at the break dancing inside of Chipotle, let me turn off some of these lines out here. I mean, it makes it hard for me to, what did I do there? I don't want to insert. I wanted to edit this chart out here. There we go. So let's turn those off. So we take a look at, let's turn off those moving averages as well. You don't need that. So if you take a look at Chipotle, this had a really huge sign of strength on the trading day of July 22nd. There was 2 million shares to the upside. Now, when price pulled back to test that breakout area, it came right back. Remember, gaps are your friends out here. It did test it with light volume, 1.5 million shares out here. So what does that set up for Chipotle? At this stage here, It's come back to a breakout area. It's done it on light volume. It's got a couple of gaps, so it's got a couple of open windows. This thing has more gaps that make it a little bit of a psychotic type of equity to figure out how to trade it. Truly, it does. What I would say, though, is that if somehow over the course of whenever the next several days, this thing were to gap up above about 631.50 out here, you could actually have an island bottom. And what would that set up? I don't know. I'd have to say it probably sets up a consolidation-ish type trade out here. Maybe, the equity, if it can gap up and create that island bottom, maybe price gets somewhere in the 669, 685, 705-ish type area. Otherwise, if we don't see that, the bounce today is light volume, 693,000 shares, going to that gap down of 2.1 million shares. Probably going to go back and test 596.90. And if it closes underneath 596.90, that's going to set up your secondary test, which says you move down to $442. So Chipotle, probably a stock to better not be trading. And if you're in it, I would make sure that I had a stop underneath that low of November the 6th out here, that price being $594 even Steven. If we look at Priceline, we know Priceline had that island top out here, confirmed that yesterday. Until it gets back to rescue those passengers, Priceline wants lower price. Where is Priceline going to head to? Well, it's an excellent question. It's most likely headed back to one of these swing points out here. It is probably headed back right here to this area, right around the level of about 1129.98 before it provides you and I with any other information out here. Today's move, come on, what are you doing here? Interesting that sometimes during this show, must be when I hook up into TFNN, that it just really slows things down here. But if we take a look at today's move, even though it's up, it's nothing. It's really nothing. Volume today, 632,000. Yesterday, 2.6 million shares to the downside. Priceline wants lower price. Pretty simple. If we take a look at Rackspace Holding, RAX is the ticker symbol. Looks like a nice move today. Let's try to figure out. This looks ugly, but it does have some volume. So out with earnings, it looks like yesterday, volume today, 8.7 million shares out here. Let's put this on a weekly chart. See what this thing has pulled back into. We can figure that out. On a weekly basis, this thing had actually broken out. So the break, that's interesting. So on a weekly basis, Rackspace broke out. You can see the volume bar, this one right here, September 27, 2010. That's where it's traded all the way back to. So that breakout really is going to be either right there or right there. So which those prices are 24.03. How about that? It came right back to that breakout session. Now the breakout, by the way, on a weekly basis did 33 million shares. It's only Tuesday. Well, we don't have to worry. It actually tested it back here September 28th. 15 million shares. So it was 15 million shares. How about that? So Rackspace Holding came right back to an original breakout area of several years ago, 5 years ago, right? September 28th, 2010. And you've got a sign of strength today off to the bottom. That's very interesting. Let's take a look at. So it's going to have a bunch of chop that it's got to get through out here. But Rackspace Holding, if this was something you were interested in getting into from a trade standpoint, let it come back and close this morning's gap. See if it will do that. Watch this. Watch Rackspace Holding as the market trades. You know, as long as the bears have control of the market, watch how this trades. Maybe this comes back and closes this morning's gap, gets back to about 28.24 or maybe 28.75 on light volume. And if Rackspace was something you were interested in trading, that it's done all of the work that it needs to do. RAX, by the way, is the ticker symbol there. Let's look at some things to the downside. We get back from this next break. We've got the Dow off $7, the S&P down 40 cents out here, and you got to love those patterns. Those when price moves lower, it does with less relative weakness. It does look like the NQ probably headed to about 46.36. Steve Rhodes will be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. 6 minutes until 2 p.m. out here. We've got the Dow is up about 8 points. S&P's up a point. Flattish type market out here. That is typical after a day like yesterday. However, when we began the show, we started taking a look at a couple of diverging patterns that were in play out here. Now, we've got 6 minutes. This is the 2-hour chart that we were looking at out here. We've got 6 minutes until this session ends. But if we don't see much movement, and the NQ closes around 46.34, could actually be a hammer candle that forms here at the bottom, where we took a look at those market profiles. They're set up more in bullish formation out here. So all of this would suggest, doesn't say that it does it here by 4 o'clock, but would really suggest a move up into about the 46.66 level. So you're at 46.35. So that's another 30 points to the upside. I wouldn't celebrate. So that's what you should really anticipate. And even if we get this hammer candle out here, within the next 4 or 5 minutes, I don't know. I just don't know what it's going to look like. And I'm off the air before this 2 p.m. session ends. But let's go with the fact that we do have a bullish reversal signal out here. You could anticipate that futures would be up, strong tomorrow morning. When I say strong, maybe up 30 points. Maybe today's just that flattish type session. Whatever takes place overnight, you come up, you wake up, and you see that the NASDAQ is up 30 points. That does not mean that the move lower is over with. So that's what I would anticipate. I mentioned that we would go take a look at a couple of equities here, moving to the downside. Barrett Business Services, BBSI. What is this here? What have they done here? I'm not going to go read that. Puma Biotech, let's look at this, down about 11% out here. So as we take a look at it, this is the daily chart that we're looking at out here. The stock chart looks pretty bad. The original breakout inside of this was down here at about the 58 buck range. So it looks like it's trading about 81.20. That's probably where it is headed to. PBYI, peanut butter, and I don't know what the Y would stand for out there. Yucca root? I don't know. Rare Earth. Let's go take a look at Rare Ultragenics Pharmaceuticals. Actually, is the ticker symbol out here. Daily chart again, straight at 98.05. Volume today about 400,000 shares out here. Looks like this equity is making a run back towards the swing point from October the 14th. Could be setting up an A to B equals CD to the downside. What else would we want to look at? I don't see really a whole lot here worth paying attention to the upside. Let's look at Simon Property Group. Let's go take a look at it. SPG up about $1.80. Now, Simon Property Group here, we were looking at the IYR earlier, so it makes sense to go take a look at Simon Property Group. Heavily weighted inside of the IYR, I'm sure, or it should be. This moved down with volume on November 6th, 1.8 million shares out there. Then yesterday was down with another 1.8 million shares. Today's bounced 562,000. So this is going to come down to, looks like September 17th at least, and test that high of 188.30. If you see a close below that, Simon Property Group probably comes back to test the June 29th swing point, and that's priced somewhere between the 170.99 and 175.39 out there. So, folks, it is Terrific Tuesday. You know what that means here at TFNN. That means we've got the full lineup. The full lineup means we've got David White. He's going to be up next. After David, we've got Tom O'Brien from 3 to 5 and Andy Heck to bring it on home. So stay tuned, folks. Have a great Trading Tuesday. I look forward to seeing you on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.